Hi everyone, this is Gavin McMaster from Options Trading IQ, and today we're going to be looking at how to trade double bottoms. So the double bottom pattern is a reversal pattern that indicates the change in trend from a downtrend to an uptrend. And it's characterized by what you would call a W shape. That's what the chart pattern looks like. It looks like a big W. And what happens is the stock will make a low, it will recover, and then it will make another low around the same level of the first low, and that second low will be shaking out the weak hands, so transferring the stock from the weak hands to the strong hands. And the technical buy point, which is something that a lot of people get wrong, and it's when stocks cross back above the middle peak. So how can you trade double bottom patterns? Well, using options, there's a couple of ways. If you wanted to be quite aggressive, you could use a long call strategy. If you are a medium risk, you could trade a covered call or a diagonal call spread. And if you're very conservative, you could trade something like a bull put spread. So here's kind of a textbook definition of what a double bottom looks like. You can see the sort of W pattern there at the bottom, and the buy point is when the stock crosses back above the dotted line there, which was the high from the middle peak. So here we have an example on Pfizer stock. You can see that the stock made a low in early 2000, and then it recovered and then made another equal low around March. And so this is the middle peak, and that once the stock crosses above that level, that's considered your technical buy point. And you can see that it also at the same time broke this trend line, so that was a very solid buy signal, and it was on very high volume, so a really good signal there. And a lot of times what you'll see in these double bottom patterns is that the stock will break out and then it will come back and retest that previous resistance line, which then becomes support. And here's another one, fairly similar. You can see United Technologies making a low in late October, recovering some of those losses, hitting the downtrend line, and coming back and making an equal low. And you can see that volume starts to pick up on the recovery here, and this is the indication that the strong hands are taking control. And then once it breaks through that resistance line, that's your buy signal there, and away it goes. So again, another sort of textbook definition here of a double bottom. You can see very similar to the previous two examples that we looked at, particularly Pfizer, where it broke through the confirmation line and came back to retest. So making a low, recovering, and then making an equal low, and once it breaks above that middle peak, that's your buy point right there. I hope you enjoyed this video. Just a reminder, if you haven't already, head over to optionstradingiq.com, sign up for the IQ newsletter where you'll get weekly market updates and trade ideas. You'll get a free option strategy workbook, a free sample options trading plan. You'll get my special report on the 20 essential skills for traders, and you'll also have access to 50% off on the IQ Trade Alert service, which has been doing really well lately. So that's it guys, hope you enjoyed the video and have a great day.